Good morning, everyone. Welcome to a new episode of today's Opening Bell, or how we call it in Romania, Deschiderea De Astăzi. Today we're going in Prague and we're starting a new week on the capital markets. We will be discussing with Ján Hladký, equity analyst for Patria Finance. Ján, hi, good morning.
Hi, hey Leo. I hope I'm pronouncing your name correctly.
Ján, how are you? How's the week looking in Prague?
Well, the weather is turning into summer slowly, so it's all good. Days are long. The mood is nice considering inflation, the war, and everything else that's going on right now in the world. And
let's hope the investors are not out there on the beach drinking cocktails. I have just a little bit of context. I met Ján at a CFA conference in Prague. He was a speaker there. Tell us a bit more about Patria Finance. What does it do?
Well, we are as of today, I think we are the #1 retail stockbroker in Czech Republic. We are owned by ČSOB, which is one of the largest banks in Czech Republic, that is in turn owned by KBC, the Belgian bank. And we provide the basic stockbroker services here in Czech Republic. The company started in I think 1993, so soon after the Velvet Revolution. And I think we are right now the largest retail stockbroker. So our main customer base is retail clients. Yeah.
How many clients? How many retail clients do you have?
I'm going to go out on a limb here. I don't have these numbers in my head, but I think we're talking about 30,000 active clients. That is, we have 30,000. Yeah. The number doesn't seem too big. That's true. That's for sure. But one has to acknowledge that we are in Central or Eastern Europe, whatever you want to call it, where the investing doesn't have such a. I'm not sure how it is in Romania, but at least in Czech Republic and Slovakia, I'm originally Slovak, isn't such a big thing still to this day. So people don't trust the public markets, and they don't understand them. So most of them are invested through pension funds and mutual funds and so on. So there is only a small clientele in Czech Republic that actually does investing on their own.
Some people here also have this challenge to attract more people, more investors at the stock market. What's the main retain? What keeps people away from investing, let's say?
Well, I'm not sure how the things developed in Romania, but in Czech Republic and Slovakia, we went through this privatization period in the early 90s, where basically all the companies were privatized in the way that every person got a small share of a company, and all these shares were distributed throughout the population. But people, because they went through 40 years of communism, they had no idea how these things should be traded, valued, what actually even is value of a paper like this, of a coupon share of a company. And then there were a couple of people that understood it, or at least saw opportunity that could be exploited, and they robbed, maybe is a strong word, but maybe not in some cases, a lot of people of their earnings, of their money. And now people don't understand it, people don't trust it because of this historical experience with this period. And also the thing is that it's still for some reason, it's still considered very risky investment. People are very conservative here. They have their money either in, as I said, mutual funds, pension funds, or they are just trusting the public system that they will take care of them when they retire. or they just have the money in like the normal accounts, you know.
It's the same. It's the same in Romania, and I like it that you mentioned experience. That's being the biggest lack of.
I mean,
yes.
Yeah, things have certainly moved or changed a lot, say, in the last 3 years, because I think as everywhere in the world, like the investing exploded in popularity, not always to the best of consequence, to the best of effect, where people see even where people like started trading, investing, and they didn't understand it, and they got screwed over again, and now they will not trust the public markets for the next, or well, not screwed over, but they lost their money and they think they were screwed over, and now they won't invest in like the next 10 years, you know, like. But still, like the popularity of investing in public markets certainly increased in the last 3 years.
The crypto bros, the Wall Street bet. Yeah, no, you're an equity analyst. How do you see the markets nowadays?
Yeah, so just also a little bit of introduction, maybe. I'm an equity analyst here in the stock broker in Patria Finance, the stockbroker, and I and my colleague, we are focused mainly on the Western markets, which is like USA and Western Europe. We are trying to follow all the sectors because there's just the two of us, and we are trying to cover pretty much everything for our clients, which makes it like in total at least like 1,100 companies spread into 500 in the US and 600 in Western Europe, just in the biggest indices, you know. And because we are trying to follow everything, we don't really have deep knowledge of each individual company, because there's like no way like human brain could cope with that. But we know like bit of everything from everything, and we approach investing and we approach analysis of equity more in the sense of getting general feeling of the market and setting up a strategy that our clients should follow. And we turn these ideas into reports that we give to our clients, and we try to guide them through the market to the best of our abilities. And the way we see it, to answer your question finally, sorry, the way we see it right now, like there are, I think, two ways to look at it, right? You have one camp that basically says that everything that you can see from the start of the year is just irrational exuberance. You have these perma bears who see every market rally as a just bear market rally, and that the storm is actually still gathering, and the economy is heading into recession, and inflation is not going away, and the interest rates will have to go higher, and so the markets will fall. And then you have this other camp who doesn't see anything but, for example, the new sexy OpenAI and ChatGPT and large language models and generative AI investment ideas, and they just pour money into the market like without second thought. And so these are I think the two camps that are right now fighting amongst each other, amongst themselves, and the bullish camp, the AI camp, is right now winning. The way we think about it, the truth, as is usual, is somewhere in between. And even though like just a month ago, I was much more skeptical about this recent rally, and that was because what I was seeing is the inflation in US being more of a persistent problem. You have 5.5% core inflation still, which is 3.5% above the target. Some of the macro indicators were flashing recession signs. For example, the purchasing managers indices, and the commodity markets were also giving you the recession vibes with the oil coming again underneath $80 per barrel. So you had like these signs, and then you looked at the market, which was just like going up with every new earnings release from Microsoft, from Google, from Apple. though, and honestly, these earnings releases from this past earnings season weren't that good, considering the valuation, which is for some companies back to the levels we have been seeing in 2021, particularly for Apple and Microsoft. And like when you look at 2021, where you had and the growth rates on the revenues and on the earnings per share of these companies, and where you are now, you can't really compare it. So these valuations shouldn't be that high for sure. And so you could see this as being the sign of the irrational exuberance. You know, you have these flashing signs of recession, and then you have this stock market. The bond market again was like showing you recession signs, and what you usually see from historical experience is that the debt market is always right, has it right, and the stock market just returns to the bond market. But then we had the release of NVIDIA earnings last week, and like those earnings were just unbelievable. Like they blew me away. Like when I first saw the news on investing.com on their guidance, I thought that this has to be like some kind of a mistake, because like coming from semiconductor cycle is a really quick one usually. Like you have this huge fall in the revenues, huge fall in the earnings per share, in the margins. Then you have couple of quarters coming, like getting you back to where you were before. But with NVIDIA, you went through the cycle, like you fell off the cliff, and then you jumped right back up to where, not even where you were, but even higher with those revenues estimated by NVIDIA. And so you can see from what I'm trying to get to, with my long explanation, sorry. What I'm trying to get to is that there might be some rationality behind these recent stock movements, you know, because all of a sudden, with the guidance from NVIDIA, the stock doesn't seem that expensive as it did just a week ago, you know. So
the stock individually here in this case being NVIDIA. Yes.
I'm right now I'm talking about NVIDIA because the earnings from last week really changed my perception on the state of the market right now. Like
what target price? What target price do you have for the NVIDIA shares?
We don't have target prices because, you know, in order to have a target price as an equity analyst, you should have a proper model, like DCF analysis. You should have a proper valuation. And as I said, because there are just the two of us here, we don't have time for all of them. So we only have like two models. One is for Apple and the other is for Facebook. And even like the target price is a very, I would say, ad hoc number. Like I can give you any target price I want just by tweaking the model basically. And even though like this is supposed to be it attempts to look like a proper science, it's very much guessing anyway. So you can see like when that the price of the companies, the target prices are very often just following the market price. So,
but for instance, for a new investor, how relevant is the target price when this new investor considers buying shares?
I would love to tell you very relevant, but in all honesty, and in this case, I'm shooting my own my own position in the leg, as I would say, because I'm also an equity analyst. But I try to look at this realistically. And the last couple of years, 2020, I'm talking about 2020, 2021, 2022, showed me that either the analysts from the large banks like Goldman Sachs, JP Morgan, Morgan Stanley have no idea what they're doing, or they are following some other motivation than just being honest. Because you know, you can't tell me that a company such as, I don't know, UiPath, who is offering these automatizations to your basic work. It's a Romanian company, actually, isn't it?
Yes, UiPath. It started here. Yeah, the first Romanian.
It's total coincidence that I picked this up. Not just because it's Romanian, but like I just was. It had earnings yesterday, and I was thinking about it yesterday. Well, long story short, you can't tell me 1 year that they are worth $80 per share when they come to the market, and then after the latest release, tell me that they're supposed to be worth 20. It's either that you were just trying to pump the demand for the stock because you had the interest of your employer. It's like because you were just following the interest of your employer, or you don't know what you're doing. You're just as well blind as I am in these cases with the growth company. So I'm trying to, I don't know, let's say, limit the expectations of new investors from the target prices, because they tend to be very much bullish and they come down together with the market price very often.
You brought this up, the YFAT. How do you see the YFAT and what the Wall Street, because it went public at like $56. It closed on at 70, and right now it's around 14. How do you see it? And,
you mean,
why?
We're talking about UiPath.
Yes.
Yeah. Well, here's the thing. I was actually tempted to put my own money into it when it was around $40 per share, and because I really liked the idea of automation of your like tedious tasks that you do every day at work. And with this way, you could increase productivity of your employees, you know, because they don't have to, I don't know, send 70, 100 emails each morning when they come to work. But here's the thing: with there's an actual or some truth to the fact that things changed very much for UiPath with the introduction of the LLM models this year. Because right now, I'm not sure where's the value of the company that's giving you automatization, or how you spell it, procedures, robots to if you have ChatGPT, you know, like where, like, did it happen that overnight UiPath has just lost its a large chunk of its total addressable market? I'm not sure right now, but for sure, I wouldn't invest right now, because I don't know whether there's a place for them in this, well, let's call it new world.
So it's a risk for them, ChatGPT.
Yeah, but on the other hand, there's a price to everything, and if you like the company at $80, you should like it at 17, right? And the valuation is much like for $80, there wasn't any room for error with that valuation. You couldn't even speak about valuation because you didn't have any earnings. You don't have any earnings now, so you can't use like PE, like price to earnings ratios, right? So there's not even valuation per se, but still, like the price of $17 per share gives you at least some room for error if things go wrong, you know.
Let's see on the European markets. How do you see the Western markets right now?
Well, whichever side of Atlantic you wish to look, it all comes down to Fed, to American Central Bank. Like the dollarization of global economy has its benefits, but one of the largest drawbacks is that basically the Fed is dictating monetary policy to the whole world, and we all have to follow because we are all dependent on the US dollars. So if right now, as American Central Bank, as Jay Powell is saying, they're not going to be raising interest rates anymore, then even, for example, a European Central Bank doesn't have to be so strict in tightening their monetary policy. So even though right now European Central Bank, the governors of the central bank are saying that there is still room for, I think, 2 or 3 more hikes to slow down the inflation, slow down the economy. If US says that 5.25% where they are now with the interest rates is enough, and they want to wait what the economy shows them, then even European Central Bank might wait. And if you have this notion that the interest rates have plateaued on both sides of the Atlantic, it again gives you a hope that you can still avoid a hard recession, because with 5%, the economy maybe can still it doesn't have to grind to a halt. It can still grow, even though slowlier. And if you have any hope that the interest rate again won't rise any higher, you can again pour your money into the growth companies, which is what happened from the start of the year, right? And finally, you saw after the banking crisis in US, you saw the end of the tunnel for the rising interest rates. So your yields were starting to fall in, your real yields were starting to fall, and which opened up a way for the capital to again pour into the growth companies. So it wasn't just about the AI actually, the recent rally. It was also about the real yields going back down. Yeah. And when I was, maybe one more thing to the banking crisis, this seemed like a big thing a couple of weeks ago, but apparently right now everything is stable on both sides of the Atlantic again. What really blows me away is the return of the European bank stocks. Like if you look at the chart of UniCredit, it's just incredible what the stock has been doing, what the bank has been doing. Even like the laggards, like typical laggards like Commerzbank and Deutsche Bank, the German banks are showing signs of some reprieve. And it's amazing that you really, whenever words banking crisis were uttered, you would immediately think Europe. And now all of a sudden, European banks are those like stable stalwarts of the global banking system, yeah, which is amazing to me.
Would you buy banks shares right now?
Not for this price anymore. Like if you haven't bought in before, I wouldn't at this price, because I think all the good things are right now priced in, or most of them, at least, because right now you still have this. I'm not sure into how much of a detail I should go on how much banks actually earn money. Should I go into some detail?
No, just short, because you don't have much time left, and
okay.
I have a couple more questions.
Right now, if like the future returns on the banks in the banking sector or in the banking stocks will be dependent on what the European Central Bank says about the interest rates. Mm-hmm. And if you accept this proposition that Fed, American Central Bank, won't be rising interest rates, then European Central Bank won't be raising them that much, and in that case, your net interest margin that you have in the banks doesn't have too much of an upside. So there's not too much of an upside for the interest income of the banks, and even though their portfolios look great, like the default rates are historical low, I don't think there's too much of an upside there, and you still have a risk of maybe running head-on into a recession, which still could potentially increase the rate of defaults in the banking sector.
Yeah, I have 2 more questions. What about energy stocks? How do you see them, and how do you see ČEZ? We have ČEZ in Romania as well. It still has some operations here. The majority was sold to Maguire. How do you see energy stocks?
Well, so firstly, the global, or well, let's call them Western energy stock. I don't think with the oil still trading somewhere between $70 and $80 a barrel, I don't think it will go down too much, because there's still Americans waiting to refill their strategic petroleum reserves, and also there's a positive risk of China getting out of COVID problems sooner than expected. And so these 2 things should put some kind of a floor underneath the price of oil. And in that case, you're looking at oil companies still printing huge amounts of cash that they are giving back to shareholders, and they're giving back to shareholders. They're not using for increasing production. And secondly, ČEZ, it's a complicated question, because I was never too big of a fan of investing into companies where state has majority. And that's for simple reason, because you're playing a very uneven game there. Like you have your majority shareholder basically able to change rules as he goes. And in that case, it's not an even play, you know. You don't want to play a game of chess against a guy who has like, you know, twice the number of pawns on the board and so on, right? It's not the odds are not stacked in your favor, and that's exactly what happened right now. Like there was talk that the state might come in and buy out all the minority shareholders, but I never believed that, because like why would state pay, I don't know, 160 billion Czech crowns for these stakes if you can just change the rules and squeeze them out, you know, and give them whatever price he wants. Like what's the motivation for state to give you money if he doesn't have to? So right now, I think what's going to happen, but don't take me like this is not a gospel, you know, things might turn out very differently at the end of the day. But I think that they will eventually split ČEZ into two companies. You know, one will be focused on the production, and it will have nuclear and maybe probably also coal power plants in it. And the other will be distribution, it will be renewable energy, and it will be retail. And now it's everybody's guess how much each company is worth and how much therefore your stake in ČEZ is worth. And all these unknowables, all these variables tell me that I would like to stay away from ČEZ right now.
Yeah, as a closing question, let's see 3 risks in the markets actually right now, both equity and bonds, and 3 opportunities that might raise this summer.
That's a good question. I like it. Okay, so
it was the last one. It should have been, yeah.
Okay, so let's start with risks, so we have something to cheer for at the end. So the negative risks, firstly, for sure, right now the debt ceiling debate in US, we have to mention that, even though there's too much politics inside of it. Inside, you can't really tell what's going on, so you can't know the outcome right now. But you know, eventually they'll probably come to an agreement, but it might be a protracted battle. So that's the first risk. The second is the inflation being even more sticky than we thought, and therefore the interests being higher for longer, than we thought. That's certainly a risk for both bonds and for sure for equities right now. And the third risk, I would say, well, I mean, you can't maybe discount the war in Ukraine getting even more out of hand than it is now. You know, some even bigger escalation. I'm not talking tactical nuclear weapons, but something that could draw in NATO allies even more. So I would say these 3.
Okay.
And now opportunities there are right now. Well, the first would be that the last year was all that we have seen from the recession, and like we despite everything we thought, we won't have too big of a hard recession on our hands, and therefore you could see the estimates on earnings on equities coming up, and they could support these levels. But it's hard to fathom that they would be coming up so high that it could give you new all-time highs on the main indices. So there is some potential upside to the earnings, but not too much, I would say. The second is maybe China, and the Chinese stocks are still very much depressed. I mean, both valuations and prices. I think Alibaba is trading still for the price it was trading in like 2015, despite the fact that the revenues are 5 times larger. There is a reason for that, for sure. But I think this valuation shows you that everybody just bailed on these companies, and in these cases there is for sure huge opportunity for returns. And so if China comes out of COVID sooner than we expected and the regulation didn't do that much of a damage as we thought, there is potential for Chinese stocks. And the third one, I would say that for me, the third one would be that we would have a nice, peaceful, quiet summer without any new big risks coming up, because I can tell you that these past 3 years have been like completely nuts. Like you were moonwalking from one crisis to the other. Like when you imagine that it was how many years ago was it that the ship got stuck in the Suez Canal? Like it feels like 10 years ago, and it was recently, you know, that Evergrande was stuck there. So for me, the biggest opportunity would be that we actually have like nice, peaceful, quiet summer that I can enjoy vacation and something like that.
Yeah, well, actually, all of us are looking for this quiet summer, but here in Bucharest, we're preparing for the biggest IPO in history, and the biggest in
Hidroelectrica.
Hidroelectrica, yes.
Yes.
I'm sure you've heard of it. So we're looking forward getting back to you when we will have the documents on the table, so we can discuss the evaluation. How do you see this IPO, because it has the potential to unlock all the IPOs in this part of Europe. But until then, thank you very much for being here with us today. And
thank you for inviting me. It was a lovely chat. Thank you.
Thank you. And for opening this new week here. We have one more week of May. And one more question, Ján, to close the interview. Did you see any we sold in May and we went away, or not this year?
No, for sure not this year.
Okay.
If you sold in May and went away, you would miss a large chunk of the rally, with Nvidia rising 25% just last week. So you know, these things don't tend to work out that much, I would say.
Not anymore in 2023. Yeah. Thank you. Ján Hladký, equity analyst at Patria Finance, was with us from Prague, and now in Romania. Ian, if that's okay with you, so I can close the interview. Mulțumim tare mult că ne-ați urmărit. Până data viitoare, fir întins la investiții câștigătoare. Numai bine!
Știu ce spun.
Un ultimatum pentru Zelenski. Occidentul îl ajută până în toamnă, după care trebuie să negocieze pacea. De ce nu discutăm mâine? Toți soldații ca carne de tun până în toamnă ca să mai jucăm o fisă?
Știu ce te interesează.
Bogații lumii poluează pentru că își permit să plătească răul pe care îl fac, o spune Bill Gates.
Este un handicapat.
Cred cu siguranță.
Știu cum să te fac curios.
Război în masă. Veganii și vegetarianii și-au făcut aplicația lor de dating. Până la urmă, e mult mai comod o astfel de relație.
Știu cum să te emoționezi.
Întâlnirile cu prietenii și familia sunt motivul pentru care zâmbim în fiecare zi.
Nu trebuie să-ți legi fericirea de exterior.
Știu să conving.
Vă dau jucării noi, le promite Putin soldaților de pe front, arme nucleare. Cât de nebun să fii să te gândești că te-ar ataca NATO, dar intra în Sankt Petersburg să facă ce cu el. Gândește că și alții sunt nebuni ca el.
Știu să câștig.
De ce te super, Nemo? Am aliați mai buni.
Hai, Nemo.
Știu, deci știi.